Hello everyone, so I'm currently recording this video on a retroactive thesis on what I would have personally done on a stock that ended up being successful today. It was mentioned a lot in the Discord channel. What we're looking at big picture is stock that ended up being successful, but would I have traded it? Because the trap I want to get myself out of is I hate when mentors are like, oh, see, this would have been an easy trade because we do X, Y, Z. See, look how successful it became. But to me, what's more impressive is calling it beforehand and being able to make a thesis, then the thesis playing out as opposed to retroactively um, saying a stock would have went well, but you're benefiting from hindsight bias. So I do this thing where I slowly scroll the chart from left to right and see if I would have been right. And I also annotate my drawings. So let's start with that. So wider picture, I see if this day was not included, I see a very clear day three surge pattern where we have a big spike on day one. We have a day of consolidation, which you can see by the very, very thin green um, portion of the candle, and the rest of it is wick. And the potential for a day three surge. So day one is huge breakout, day two is day of consolidation. I go to the weekly chart. Oh, I don't remember this. Anyway, maybe this is better. I go to the weekly chart, and you can see a very clear spike. This like 200%. A day of consolidation at about $8. So you lose about a third, 30%. And at this point, unfortunately, I must admit, this would have not made it onto my this would not have made it onto my scanners. The reason being because my scanners are primarily percent gainers. This was not a percent gainer yesterday. This was not a percent gainer in pre-market, so it wouldn't have hit my scan at all. So that is the one caveat where I may have not seen this at all. But if I was there on day one, which I was not, it was New Year's Eve. If I was there, this would have been my watch list. But at my current stage in my career, I don't use watch lists because I'm still don't even know what to put on the watch list, but let's just say it was. So my thesis would be to look for an uptick in volume on the day three, look for a potential reclaim of actually let's see if my resistance lines. There you go. So I would look for a I'd be looking for a potential volume increase and a price increase to where I'm looking to break a key level. For now, I see that there's a lot of bunching up or resistance at $10. I would consider that to be, 9.75 to 10.25. So it's a mix of the psychological level of a one whole dollar slash a $10 level. So I'd look for a key break of that. I'd be looking for break of 10, a retest of 10, and then break of 10 again. Something like that, right? Um, but that's not the eventual goal because we're still below the high of day from yesterday, 2 days ago, which means that you're somewhat anticipating an even bigger breakout. So we're looking for a BRB break of $10. You risk $9 or whatever this level is here. Um, that we're risking 890, 880 for a 2-to-1 risk to reward with the goal of hitting 12. So that's where the 2 to 1 risk to reward comes. And an ultimate breakout above the $12 mark because that's the high of the day for like a while. Yeah, a while, right? There's also overhead resistance, but that's last month or so. That's like the overhead. So we're looking for that. So that's what I'm looking for. So now we slowly scroll across. Not looking at the right side. It's cheating. Slowly move, move. We're looking for a breakout of 10 to a breakout of 12, and then a trailing stop loss to limit your to move your stop loss up so that you can lock in profits as opposed to going all the way crashing back down. So we see, boom, our first successful thesis. Oh, and by the way, just to show you, for the volume uptick on day 3, look for a BRB entry on $10, and then an eventual BRB breakout over $12, and a trailing stop loss. And these are my annotations, just to make it clear. Yeah, same thing. Nice day to consolidation. Look for a break. So, boom! I'm happy with my first successful thesis. Again, I told you I would look for a BRB. So here's the break of the 10. Here's the pullback. 3-minute candles. 3 1-minute candles. And this is, I would consider this a good entry because it's a green candle that fully engulfs the previous kind of red candle. So I would have gone boom. Enter at the end of that minute, maybe here. 10:57 would have been my entry, let's just say. So, 10:57. And my initial stop would be like, VWAP, I close below VWAP, and or my original stop loss, which would have been this guy. But because I'm zoomed in, I see that this is probably a more reasonable stop loss. So we go here. So let's scroll across now and see what I should annotate next. I haven't gotten this far. So I'll go up. This would have panicked me. It wouldn't have stopped me out though. Here, technically this should be cut losses quickly, but me knowing my psychology, I would have been like, oh, but the red is above the VWAP, so we're fine, right? Okay. Boom, that would have got me excited. Oh, so choppy. How many minutes is this? About 10 minutes, 15 minutes so far. So at this point, theoretically, I should move my trailing stop loss from here to here. That would have been reasonable, I would say. Continues to move. Okay. Even though I'm not in the trade, I feel it. Feel it. Yeah, I think this would have taken like 20 minutes to even like. Okay. So we're almost back to break even. Well, 50 cents on $10. What's that? Like 5%? Oh, okay, we're almost back. Okay, but here, if this bounces off VWAP, then it's a bullish signal because it's holding support, right? Yeah, it's holding support. So let's see. Okay, that's good. Jackhammer, trying to get down, but it's like it's staying holding up. And then it grinds up, grinds up, grinds up. Okay, so at this point, I should take profits, right? We're at a healthy $1.50 over $10. That's about 15%. Or I move my stop loss here, right? Trailing stop loss. So my new stop is 11.95, 11.50. Let's just call it 11.50. Let's call it 11.50. Yeah, this is good. That's my trailing stop, right? Oh, but it keeps going. Woo! Okay, I'm stopped out here. For real, I'm stopped out here. Okay, this is my first time seeing this. So I'm stopped out. What are we at? 11.50. What's 1 divided by 10.50? Get the calculator going. Okay, we're only at 9% of this time, but it would be my first popular trade. Beautiful. What happened next? Okay, it's good because it chopped sideways for a while. It just consolidated and then it crashed down. Great! Great! Oh, never mind. But see, I wouldn't have been around at this time. Okay. See, this is why I hate retroactive traders because they're like, oh, see, if you held it, it would have gone to like 15:25. Like, okay, great. But you're not there. You're not experiencing the emotions of like, oh no, oh no, oh no, oh no. You're getting crashed out and all that. So anyway, but I'm quite happy with that retroactive trade analysis. I genuinely think I was explaining it left to right. I didn't see that. Like obviously, I saw the daily and I knew what it would have ended up at, but I don't know the intraday workings. Oh, and what was that? So to summarize, textbook, day three surge. We take, although I only caught this kind of morning move, it is very possible that it's very possible that this I don't know much about shorting, but it's very possible this stock could have just crashed all the way down, right? So I would argue that you played it safe by stopping out when you did, because that is exactly when it just became chop fest and went sideways. Maybe if this was still on, oh, volume is higher. If this was still on my scan, maybe I would have checked it on my radar and been like, send an alert here and be like, oh, okay, we're breaking out. Because this also would have been perfect actually too. But now I'm cheating. But this is retroactive. I would have called it a day. But like, if this hit, oh, so set alerts. That's another key lesson. Set alert for that pod, which would have been like 12:20, 12:30. And that's a perfect BRB where you're like, okay, great. Bounced. If it keeps going, I do not chase, but it went back. That was a clear chase. Sorry, that was a clear rebound, and then a retest, and then a break. That would have been a very clear entry above this line here. Here, in my opinion. I wouldn't have seen this, but it's just so good to know. Remember if you bring your exit, let's hear a rest of your work. See, right there, major resistance. There we go. So for context, the bright green line is major resistance. So that would have been a perfect range to train read right from there to there, and then maybe risking VWAP or what's that one? So yeah, two beautiful trades on INBS today that I could have taken, but I was asleep. 6 p.m. New York Stock Exchange or Eastern Standard Time is about 6 a.m. for me. I was asleep. Definitely achievable, but I was asleep. And this time, man, my supposed entry at 3 a.m. definitely would have been asleep. But it's really good to retroactively analyze these trades. Anyway, that's all I've got. I hope to be able to learn these breakout long bias patterns like it is the back of my palm, back of my hand. It's the same. For now, though, still definitely in the learning phase. Building up hopefully by this week, by this year, building up a bank of allegedly, supposedly textbook trades, textbook charts that hopefully I can print on the wall and have permanent. Um, and then eventually I won't need it anymore because it's ingrained in my mind. Oh, and the last thing I want to talk about, this time this being first, is what was brought up in the pre-market prep note and the double down note. Look, it also wasn't on his scan, so I feel a bit better about that. Like, just check this, looking at percent gainers. Well, the daily double down, Timbo and bid, and fat set token, short panic point, one of major resistance of 12. Short, so panic comfort or get margin call. So it was on his radar. That's right where I was considering my entry, was it not? Yeah, above this. Yeah. Anyway, I bring that up. I won't analyze it again. I'm already did that. But I bring this up to say that it's good that I'm aligned in that we both didn't see it in the morning, but we both saw it in the afternoon slash at 9:45 when it would have hit the scanners. So, yeah. Anyway, see you later. What should be my signature? This is the first video. I guess the channel name is the Trading Migs. So, Trading Migs is signing off, and we'll see you in the next one.